Welcome everyone. Top of the hour. Seems like everybody likes to log in right now. So if you don't mind, I just want to make sure you can hear me just fine. Open up that questions pane but down below and type in maybe where you're from and that you hear me just fine. That way I know I'm communicating and we can get started here. Thanks, Dwayne. Thanks, Tom. Thanks, Mike. Yeah, sounds like audio is coming through just fine here. We will just give it another 30 seconds and let all those who like to log in the last second join here and we will get started. Thanks, Daniel. Thanks, Mark. Okay, everybody, welcome. I am really excited to have you all here today. I've been excited for this interview for some time now. Today, our focus will be on eliminating key mistakes from your options trading. We're going to have the chance to hear from one of my favorite market guys, Steve Paoletti. Before we get too far, I think it's appropriate to stop and review a risk disclaimer. I think most of you are comfortable with this, but the risk of loss in trading commodity futures and options can be substantial. All funds committed should be purely risk capital. Past performance is certainly no guarantee of future results. Again, I believe everybody understands this, but it's always a good reminder as we discuss trading. A little bit about myself. My name is Jim Henderson. I've been in this industry since 2004. I've had the chance to really comb the country. I've been in nearly every state, having the opportunity to present how we trade options and teach people how to trade options in a simplistic, easy format that makes it very, very easy to do. A little bit about our company. Some of you are, I think, a number of you are probably familiar with us. Some of you are not. Altivest is a introducing broker. We've been in business since 1997. Over the years, we've traded millions of options. All of our staff are Series 3 licensed. We are regulated by the NFA and the CFTC. That's not something that people commonly note. They always recognize the SEC in all things, but we are regulated by the CFTC, and we have staff in California, Utah, Illinois, and Colorado. Now, my goal for our time today, I want to help you benefit in the following ways. We're going to have Steve Paoletti on and get insights from him. He's had 40 years of a career on the floor and experience that we can really glean from. We're going to focus on these 5 mistakes that we need to avoid if we want to be successful in our options trading. And then I want to take you into a live demonstration and show you the one tool that can help you avoid these mistakes that Steve will speak about. So with that in mind and knowing what our goals are, let's talk about Steve. Let me introduce Steve before I have him chime in here. Steve is a veteran trader with a career that began in 1978. He started with Refco on the floor of the Chicago Mercantile Exchange with the CME Group, continuing through 1987 performing technical research analyst, as well as working on historical models charting price relations between various markets, such as grains, stock indices, financials, metals, etc. In 1984, Steve became a member of the IOM division, that's the index and options market at the CME. Since 2002, Steve has been filling Altivest complex option spreads in the S&P 500 futures options pit, oftentimes acting as our market strategist on trade structure and execution. He's been our go-to man in the pits for many years, having filled tens of millions of options for us. So with that small intro, Steve, anything you want to add there? You there?
I'm here, sir. Yes. No, that's well, it was a fast 40 years when you say it like that. Yeah. No, that's all accurate. That's all.
Did I forget anything? Is there anything we need
Fine.
to add?
No, that's all good.
Okay.
Been in the S&P option pit since late '83, but spent all my time, there, filling orders and trading. So I think you covered all the points, all the high
Good.
points.
Well, I had one thing that we've known each other for years, but one thing I didn't know, and I was preparing for this. How did you get started? What pushed you into this industry or into the floor per se?
I got started as a runner. It was supposed to be a summer job in 1978, and I was supposed to go to Michigan State to study engineering. And the company, Refco at that time, was the main cattle trader in the country. They were doing tax strategies that had gotten very popular, I guess you could say. So me and a bunch of people, they basically begged us to stay, and the hook was that we could work market hours and go to college at night. So I went to DePaul University in afternoons and evenings and worked on a trading floor with Refco during those. It was, for them, that was their heyday. They were the largest commodity trader in the world for a decade. And a lot of it was trading cattle and gold, doing tax rolls. So that's how I got shanghaied from going to Michigan State.
Shanghaied, love it. Good feedback. Thanks, Steve. Now I know we're going to jump in and talk about these mistakes, but one thing I thought would be valuable, since everybody attending here is, I'm going to assume, are traders or looking to trade at the moment. Here we are, just started fourth quarter. For the most part, since our January highs have seen very little volatility, mostly just straight up back towards all-time highs. And now today, we're finally seeing a little bit of volatility. Can you give us your take on maybe the fourth quarter, what you're looking for, what you might anticipate?
Well, the two big things everyone's following, I think, really are, what the Fed's going to do and what the election's going to bring us. So, the Fed is probably more predictable, but the election is, people are trying to prepare for surprises. So I think and the economy's chugging along. Everyone's done worrying about jobs numbers and everything. That was news 8 years ago. So now really the biggest thing is political now.
Interest rates seem to be hitting a hot topic just at the moment, but they haven't been till, seems like today. Do you anticipate more volatility in the fourth quarter, or do you think we go back to just a good economy? And
more, I definitely anticipate, this year being a higher vol fourth quarter. In the fall, historically we've had big market moves in the fall, and so that is my thing is after November 4th, depending on how that falls, you're going to start to see a disconnect. And they're already talking about the deficits and how high interest rates have to go. If you watch some of the news stories that's starting to creep back in, that this administration has done nothing to try and curb the deficit, other than grow the economy. But I think the election is a bigger
thing,
bigger elephant in the room. Yeah.
Okay, I appreciate that. I think everybody else is probably thinking the same thing. If I were to open this up for questions, they probably want to know, what do you think is going to happen? That seems to be always our trigger. What do you think is the next step here? So I appreciate that.
The option fellows that we've talked to are starting to talk about how they're getting more volume in the December markets, as which would be the post election. So.
Right, anticipating that volatility coming in. Okay, let me jump in and ask you real quickly, since most of us again are options traders or trying to become option traders. You've been trading options for some of the biggest companies in the world, biggest banks, including us, for years and years. What do you think is the best, or what do you like most about option trading?
Well, just to define risk and leverage. I mean, you can trade. Back when we first started trading options in the 80s, there was 4 months. It was very limited as far as range on the scale of the index. Now you can trade virtually every single day. There's expirations every month. There's weekly expirations, and anybody with any dollar amount can get in and trade. So back in the day, the big hedging entities were portfolio insurance. All the all the Fortune 500 companies were pushing portfolio insurance until the big rallies of late 90s. But all after the crash of '87, it was portfolio insurance. Everyone wanted to have everything hedged, and so the big takeaway is that they can very cheaply hedge any amount of their position, and it's a defined risk,
Right.
so it doesn't get away.
Good. Okay.
Those are the two big.
That's one thing I like to ask. I think that's information that everybody listening also. I think we're all very interested in options, so I like to hear your take since you've been doing it for so long. Now let's jump into what we brought you on for, right? Talk about these key mistakes you've seen over the years, and let's help our listeners kind of learn from that. What kind of these 5 that we've put down that you talked through. First, you will notice is timing. You want to talk to timing here?
Sure. Do you want to go through my thoughts on it, or do you want to talk about how?
I want to go through your thoughts on timing. Why that's a key mistake.
Well, the phrase that back in the day that we used to tell, or I used to tell customers, was do it when you can, not when you have to. And I think that applies across a lot of other disciplines, whether it's options trading or dieting or whatever, or buying something. So anytime you're under duress or the market's under duress, you're going to pay more for the stuff you needed. So if you have a thought on trading, or if you have something you want to hedge, even if it's only a partial hedge, put it on sooner rather than later. And then it's the same thing for getting out. When you've got a time frame that is defined by an exit point or a price or a time, you have to do it as quickly as you've decided to get out. If you linger, options can decay very quickly. They don't decay in a linear fashion. As you know, they get toward the end and they start to really crater. So
fall off, right?
Right. But as far as timing, there's many ways. It could be an hour-long topic on itself, the timing thing. But I would definitely say that if you have a trade you want to do, get to it and price it up, and execution is going to be something we're going to talk about in a minute or two, I imagine. But that goes into how to get in and out of stuff. But no, I think that's the key thing is you study the market and you get ready to do it when you're ready.
Okay, everybody listening, you heard that. So you probably got something in the back of your head you've been thinking of. Get busy on executing if that's what you really want to do, right? Is that what you're saying, Steve? And focus on your exits and make sure they come out in timely fashion as well.
Well, it's also if you're thinking of a trade to do and you do the research, there's a certain wait and see approach a lot of times, and I think that has always been that a lot of people, they wait and see and it's too late.
Right.
Then they feel like they have to do something, and then if you feel like you have to do something, it's probably the wrong time. But
okay.
But in the crash, in the crash mode, big market rally, things move, and then you've got to rejigger your options. But timing is key.
Okay. What about your number 2 point, legging in and out of spreads?
Well, that goes with the timing. Once you've decided what trade you're going to do, and if primarily we're talking about spreads with the program, it's best to get into them at the same time. There's many stories about people getting out of trades, getting out of the profitable leg, and not worrying about the small, worthless leg of the options. And it's oftentimes I've seen people, leg out of butterflies or leg out of spreads because the one leg is profitable and the second leg is really not going anywhere, and then the market moves in that direction, and that leg that was not a worry becomes a major loss leader for the trade. So that's happened on several occasions. Trades that have gone from being worthless to, just ripping people's faces off.
Right.
It happened in '97, happened in '98, it happened during the Gulf War in the '90s, it happened in '87. I mean, you go back across the history of the crashes, and even a few big surprise ups. Options that were out of play one day, especially around expiration. Next day they turn into a 100 delta option that is no longer an option, it's a future. So that legging thing is usually keep the spread together. If you got into it as a spread, as a rule, I always tell my customers, get out of it as a spread.
Okay. Get into it as a spread, get out of it as a spread. Okay, great advice there. What about, go ahead, unless?
No, unless they want to take that risk.
Okay.
That changes the risk parameters, but.
Yeah, it becomes a different trade, right?
Yep, but I always recommend it to all the customers, as you know, if you put it on a certain way, just take it off that way.
Okay. And what about number 3? So you're correct on direction, but wrong on strategy.
Yeah. So that one, because of options, that one is one of the mistakes I think that everybody makes at least once. So they have the right idea and they didn't buy a longer dated option, or they had the right idea and they were a little early, and so the option decayed and they didn't manage that position and keep it current. And that you can be right and lose money. And again, some of our biggest customers were totally right and they would lose money because they were just a little early, and then they got lulled into thinking, well, if it's not going to happen, maybe I'm wrong, and then they were ultimately right, but instead of rolling up the option, keeping it current, they didn't have the options in place to benefit from the market move or to protect them if it was a complete hedge.
So when you say keeping it current, just keeping with your call by adjusting it up and giving more time.
Right. So if you think the market is going to go down after the election, and you buy some November options, and the election comes along and the market doesn't do anything, and as those options start to get near their expiration date, they start to lose more and more value. The time isn't to wait for them to go to zero. The time is to roll it into the next month if you believe the thing is going down. And if you're just taking a shot and nothing happened, that's one thing. But if you have a strategy in mind, and you want to kind of manage that strategy and keep your options current.
Good. That's good. That's great feedback. What about number 4? Volatility will mean revert.
Well, that goes back to the notion that the market's gotten so efficient that surprises are anticipated, and everybody kind of backs away from options in front of the election. The vol should pick up as vol sellers back away and they demand more premium to sell. But once the news is in the market, everybody rushes in, and selling always, gets your vol back to the historic levels on vol. It also depends on where on the pricing you are. There's a certain skew. The downside put wing always has the higher vol skew. So that's just because things go down so much faster than they, normally go up. But once news is in the market, or once an event is in the market and it's been disseminated and everybody feels comfortable, there's no more news around that event, the vol always goes right back down. I mean, that's part of our model of trading options anyway.
Right.
As you know, and I think you're going to talk about that too, aren't you?
Yeah, I will jump into that in demonstration. Yeah, good point. How about the last one? And I think this is kind of a key. You and I have talked a little bit about this. Bulls make money, bears make money, but pigs get slaughtered. Anything you want to add? You want to talk to there?
Yeah, that's an old adage back from the 60s and 70s, where if you thought the market was going to make a run and you bought a call option, or you bought the index and the thing ran up, then you say, hey, I think this might go further. And you start getting greedy and start just taking your profit, and you had to define and usually the idea of defining a profit going into a trade is the definition of the trade. You buy something at 1, you think it's going to 10, and it goes to 9, and you say, well, it might go to 15. and then it goes to 10, and then it turns around and starts going down. A lot of people change their trading parameters once they get into them. Trading stocks is different than trading options. So if you invest in a stock and you're in for the long haul, then you're not looking at it. But if you're trading options, you have to stick to your plan. It's like you have to plan your trade, and like scuba diving. They should say plan your dive and dive your plan. Same thing for option trading. Plan the trade and then stick to the plan while you're trading. If it gets a little bit, if you leave a little on the table, next time you build it into your next trade. But a lot of times, being short or long, you can make money. Trying to make more and be greedy about it usually tends to slap the position around. So yeah, I would agree with that. I think I've seen plenty of that.
I was just going to ask you, have you had any big experiences that you recall on getting a little too greedy with any of your big clients?
In our clients, from the standpoint of the options, we've always tried to advise them to get out. But yeah, in '97 we had a client that was short options going into October of that year, and that's right when the Asian contagion, when the Taiwanese bot had gotten hit, and everything was going on over in Asia, and they were short the downside wing, and they had made a lot of money for months and years, and they've been selling that wing all through the rally. From there was a little bit of a market rally for 3 or 4 years after the Gulf War. When the internet first started popping up, and stocks started to come up, and they had sold options that were trading nickels. They could have bought their positions, the short positions in, and taken them off the books, and they were not worried at all. They said, what can happen? And those options created one of the biggest losses the company ever dealt with. That was '97, and then it happened. It repeated again in '98 when long-term capital went under. We had another huge down in the market, and same thing. We'd have options trading. You could have bought for the lowest price available, and they were like, "No, they're going to go to zero. Nothing can happen." And they go from $0 to $100 in a matter of days. So I've seen that happen.
Amazing.
Yeah, amazing. That was by far '97, '98 were big issues in our pit, and they reverberated for years, actually.
Wow, amazing. Amazing. I'm glad I didn't have to sit through that period of time. I've sat through a lot over the last 14 years, but I haven't sat through that much. So it's crazy to hear that type of experience.
Yeah, well, that was also back. The clearing firms were just starting to realize how options were acting. In the '80s, no one understood really how the markets, how the options could react. '87 was a wake-up call, and all through the '90s, they started to have computer programs that were available that could give the margin department, real-time values. And it was '97 that was the final wake-up call for them, and they started changing all their parameters. So they were ready for the crash in 2000.
Wow, no, that's good.
Yeah.
Well, Steve, hey, I really appreciate your time. I'm going to jump in and show everybody listening how we've been trading together for the last year, show them what we've built that really kind of helps eliminate these mistakes we've been talking about today. Before I let you go, though, I wondered if you would be open to some kind of rapid fire questions so people can learn a little bit more about you, or maybe glean some information from 40 years of experience here. You game for a rapid fire 4 questions?
Sure.
Okay, question number 1. Who do you consider to be your biggest mentor? Or has had the most impact on
mentor,
you? Yeah.
The single biggest mentor?
Yeah.
In the whole 40 years I was down there was the owner of the company, was the owner of Refco, Tom Dittmer. He was a bit of a renegade.
Okay.
He wasn't, and they started trading options early on in 1985, 86, 87, and they were game for anything. But yeah, as far as, there's many guys in the pit. There's a couple of traders from O'Connor and and CRT back in the day that were very instrumental in my own personal trading. But yeah, I'd say the early Refco guys were probably the biggest.
Okay. What do you feel is what do you feel is a must read for all listeners or traders, those who want to trade?
Well, besides the options books, McMillan options guys. I mean, the
Whatever you
Black-Scholes
think.
model.
Yeah. Whatever you think.
Well, there's a bunch of them. Back in the day, Reminiscence of a Stock Operator was, everybody at work had to read that. And that was, that was written back in the 30s. That was about just the stock markets, but it applied to mentality. And then Dow Theory, we all had to read that. That was all back when we were doing charts by hand before computers. And that dealt with how demand and supply, were tracked in the market and indexes. But there's a pile of new books now that were much easier to read than the Macmillan Bible that came out.
Yeah, for sure.
I mean, well, I think Black-Scholes' first book was, we went through it textbook style of work, and it was dry. There's much better books out there now that are quicker to read, and but that's the other thing I think is it's like eighth printing. But the good reads are like Reminiscence of a Stock Operator, Merchant of Grain, all that stuff that dealt with the early markets and the pioneers. Yeah, those are I would say those are must reads.
Okay, and actually I caught somebody throw out a question for you in these regards, so I'll throw this out. Pete has a question that says, which current market pundits do you like now? Anybody you follow, whether that's on TV or online or anything that you like to listen to?
Yeah, there's a couple of guys. I seem to keep gravitating back to a few guys at Zero Hedge because, and you and I have talked about this too. If you watch the news, if it's on TV, it's old news kind of thing.
Yeah.
If it's breaking news, it's already in the market. There was a company years ago called Need to Know News. Bloomberg has, Deutsche Bank has an internal news feed. The subscribers to the really fast news, and they pay thousands of dollars a month to get the news, an hour before everybody else. So everybody, so in that regard, everybody's news is old news, unless it's like, a terrorist attack or something. So, but the mentality that the Zero Hedge guys have, I think it's pretty well thought out. There's a few others too, but I'll just stick with them. I gravitate back towards them.
Okay, and since we used one of our listeners' questions, I'll ask you just one more, and I'll let you sign off here. But what's the best advice you've received? Any advice? I don't care what type of advice, whether it's trading or just personal.
Best advice I've received, and you don't want personal. You don't want trading advice.
I want trading, but I didn't give you a warm up to this, right? So whatever comes to mind.
No. So, well, we used to have old traders that always had, catchy phrases. But the one that I've told my kids as they've grown up was to do it when you can, not when you have to.
Okay.
Timing is important.
Right.
It's like when it comes to studying. A lot of times they want to put it off. And I go, no, because you might not, it's like cramming for a test. Everybody used to cram for a test. Well, that works sometimes, but if you actually know the material, you won't have to cram. So if you're doing it when you can, instead of at the last minute when you have to. So I like that one. I use that one more, in a daily basis now. And I apply it to my trading too. So I would say that kind of cuts across.
For sure,
and
everything.
Trading, yeah, that one kind of goes with a lot of stuff.
Awesome stuff, Steve. I appreciate you taking time out of your busy day to join us. I think it's been very, very helpful for our listeners to focus on their own options trading and take these points and apply them. And I appreciate your time today.
You're very welcome.
Thanks, Steve. We'll talk soon. I'm going to jump in and show them what we've been doing together, as I mentioned earlier.
Okay. Take care now.
Thanks, Steve. Okay, that's a little catch up with our veteran trader. I've known Steve. I've worked with him since the really beginning in 2004, and I've had a chance to get to know him and utilize him and his experience in trading for years. I always enjoy catching up with him. So I think hopefully you found that very, very useful in your personal trading. As I mentioned, I want to jump in and I want to introduce you to the one tool you'll need to help you benefit and avoid these trading mistakes with your options. So I want to draw your attention. I know you've been listening to me go back and forth with Steve, but I want to see if I can just ask you to pay attention for the next little bit. Let me walk you through this one tool that you need. I promise you're going to experience something new and valuable, and you're going to have that aha moment where you find that tool you didn't even know existed. I'll also help you gain insight into your own trading psychology, and I promise you won't regret our time together. Now, this tool addresses all those topics as I mentioned. It helps you create the perfect strategy, helps with trade selection, that timing or time management, and really the risk management methodology, and what to do in bull, bear, and flat markets. I talked earlier to our experience. We've been in business since 1997, and through the years, we've seen a number of the things that Steve talks about. He's had 40 years. We've been going since 1997, and we've seen and traded with so many people. We've seen all of the mistakes. We've done a number of things right at the same time. One of my quotes that I like, Thomas Edison, he says, "I have not failed. I've just found 10,000 ways that won't work." How true is that with your trading? We've found those 10,000 ways that don't work. The good news is we've bottled them up or thrown overboard. We're going to help you focus on only what works and nothing more, right? I don't think most of you are here to try to learn to be the mad scientist, right? We all jumped in to try and hear from 40 years of experience to figure out what we can take from that and apply it to our trading, not so we can start from the ground and be the guy 40 years later, which feels like you have to be if you're going to be the mad scientist type guy here, right? I mentioned we focus on only what works. We're going to provide the easy way. We can cheat to the front of the line, put all the mistakes past without having to go through them, and help you learn from that experience. Steve talked about the keys to what he thought were the best for option trading, right? And that really is that leverage and the portfolio protection. But you have limited risk strategies, which he noted as well, and the non-correlated returns. Income strategies are very, very popular with options. High probability trades such as credit spreads, we'll talk to those. Bull, bear, and flat markets trades. And my favorite, the flexibility. I can create a trade with options for any outlook I have. Now, we've found that there's 3 secrets to option trading success. We talked about some of the errors, right? Steve went through some of the key areas we need to eliminate. But secret number 1 to your success is experience and education really do matter. I've mentioned a couple of times, we've traded millions of options over the years. We've worked with thousands of clients. Experience and education really do matter. This was me when I first got started, right? I'm making all the mistakes we've talked about. I've seen them. I've made them. I learned trade options and became very successful real quick, thinking this is so easy only to watch it go away quickly because I had no experience and I didn't know how to avoid the mistakes. So it does matter. As you work with us, you get access to people like Pale. You just heard from. You have our head of operations, Charles Starnes, 33 years of industry experience. Our 2 principals, Mike Armbruster, 24 years, and Eric Gebhardt, 27 years of experience. Secret number 2, full-time trading really isn't glamorous. I know a number of us have studied this out, trying to figure out, okay, hey, if I could just trade, I could drop my job and do everything else, I could just trade all day. You all have day jobs, you have a family, you have life, other responsibilities and interests. Do you really want to be a full-time trader if I can teach you to do it effectively in minutes a day? Of course not. This is the full-time trader. This is his life, studying, absorbing, and trading, staring at hundreds of monitors. You don't really want to be the guy sitting behind the screen. I think the idea is we all want to be like these two. Whether it's a beach or other destination you prefer to be, We want the carefree lifestyle when it comes to finances, right? We want that liberty that comes. Secret number 3, less really is more. Take all of the trading platforms, the hundreds of bells and whistles, the training courses, data fees, subscriptions, pundit advice, or too many markets or strategies. They are really barriers to your success. But don't just rely on me. Here's what our clients say. With my busy schedule, AltaVest is ideal platform. It allows me to see how my trades are going in an instant. I love the trade alerts that keep me informed when I'm traveling, and the staff are always there to help when I am in need of more information. Less is more. You don't want to worry and have to listen to the market pundits all day long, right? We all know this call. We all know how this went when it comes to Bear Stearns, right? You all know how your emotions are. This is a great quote by Mark Lindheim, head of strategy at Alexander Forbes. He says, unfortunately, humans are all wired with this built-in bias, which can lead us to make poor investment decisions such as chasing past performance and or selling out after market correction for fear of losing more money. How well do you gauge your own emotions? It's a really hard part of our trading. And does your to-do list look like this? You've got everything on it and you still got to figure out how you're going to get your trading in, right? All of this stuff, less really is more, because all of the more just leaves us confused. I mentioned this before. Here is the good news. With our experience, our decades of experience, we've figured it out so you don't have to. You don't need to be the crash test dummy here. Now, I also want to ask you here, I want to prepare you to take action. When I introduce this one tool you need, I want you to be prepared to take action. Quote I really like by Tony Robbins. Everybody knows Tony Robbins. Change is inevitable, progress is optional. I heard a recent study that said that 95% of change just happens. It's just as he's saying here, it's inevitable, it's going to happen to you. Only 5% of change is actually self-driven, chosen by the individual. And I think the idea that you're all here and taking time out of your day to learn means you're looking for change. You're looking to gain that insight to make those changes into your trading. And I want to challenge you. When you see this, you're going to love it. Take action, okay? The secret weapon, this one tool is here. It's completely revolutionary. It's called Theta Trader. And what Theta Trader is everything you need, but nothing more. It is pre-selected, sophisticated option spreads delivered straight to you. You now have access to a proprietary algorithm that creates a menu of pre-selected trades on a daily basis. We call them Theta trades. Same type of strategies that hedge funds and institutions use. You can build trades for bull, bear, and flat markets. And you now have an automated risk and profit management tracking tool, which we call the RTI. Listen to what our clients say. This is a client who's been trading iron condors for 6 years. Says your indicator is the best tool for monitoring trades. I will show you that today. Here's our indicator. It's a simple color-coded system we call the risk thermal indicator, RTI. It is designed to keep those emotions in check. It works much like a street light would. If it's green, your trade's good, let it go for another day, check it again. If it's blue, it's even better. You're high in profits. You want to bank those profits. It helps you manage those trades, right? Where you have a winner, you bank it. Just like Steve talked earlier. You don't let it go until it turns into a loser. That blue will indicate when you should be looking to bank that trade. If it's orange, this is really where we also come in very handy, because now as we talk about adjusting those trades we're getting behind on or maybe getting behind on, we want to manage them. We want to adjust them and make those moves. You will now have, and I'll get to this here more in a moment, but you'll now have someone with at least 13 years of experience in this industry able to help you on looking to adjust those positions. If it's red, that's your stop light, right? You're going to stop this trade. You're no longer staying in it. You'll make those adjustments and move on. It's really that simple. So when you log in each and every day, and I'll walk you through this here in just a second, you'll have this RTI attached to all of your trades to help you manage those trades. Now, so let's stop listening to me here. Let me demo this for you. You guys are going to love Theta Trader. Let me drop the screen and make sure you can see the demo. Gotta make sure I'm sharing. Okay, so I'm going to move this. Okay, perfect. So you are now looking at ThetaTrader. I'm going to jump us to the dashboard. I'll go back to the simulator here for you all to see it in a moment. And now you're looking at the dashboard. When you log in, this is exactly what it would look like. You have in the, grab a pen. You have in the upper left-hand corner, you have the theta trades. These are the pre-selected sophisticated option spreads built, already built for you. You have your current bias, which is showing bullish, right? With the bullish tab highlighted to select those trades. Now, you may be contrary, maybe more bearish, or want to have some bearish trades in play. So you can click that tab. It will populate the bearish trades. And if you're neutral or are looking for more of your income style type trades, such as an iron condor, things like that, call spreads, put spreads, you can click on the neutral and go there. Down below, you have your open sold positions. This is where any trade I've placed will be tracked. It will be tracked with the RTI I just went through, and you can see at the moment I've got 4 trades on, one with 2 days remaining, 16, 28, and 28, and all of them showing a green risk thermal, so I'm going to let them go. Notice that even though it's green, this trade is actually down 1.19%, not much of my targeted value that I stand to make on that trade. So I'll walk you through that. And again, this trade here is a long position that bought and green and currently up about 6% of what I'm looking to make there. So that's a quick synopsis of what it's going to show you. It's going to give you quick little bits of insight into how you're trading going. Again, not all the bells and whistles, just the straightforward information you need to make quick decisions. You'll see the current quotes or how the markets are going at the moment. You can see the S&P is having a really bad day. That's right here at the moment, down 37, almost 38 points. You got your NASDAQ, your Dow, gold, natural gas, dollar index, all of that's there. So you can keep an eye on how those markets are going. And then you have your account information here. Once the account's set up, you'll have your account information, cash balance, market value, available capital to trade. All the information is right in one spot, so you don't have to zigzag or go back and forth or toggle back and forth between different web pages. All of the pertinent information you need for your trading on one spot. So let me erase these scribble marks here. And let me open up the theta trades. Let's take a look at these. Let's go to, let's choose neutral here. I think everybody's familiar with an iron condor, so I'm going to take that approach. I think most of you are familiar with the style of what an iron condor is. So let's build one. You can see when I click on iron condors for the S&P, these 3 pull up. I've got the NASDAQ, has 3 as well. Russell probably has, yeah. And this is the full size S&P, so if you want to do the S, so we'll go back to the E-minis. Let's look at placing a trade for, let's just take the first one, 44 days out. I click on the trade. It's going to pull up all of the information that I need for this trade. Try to expand my, get these arrows out. Okay, so I'm just expanding for myself so I can see a little bit better. Pull out with the pen here. Again, you can see the market. You can see how many days are left. You can see the cash required. This is always going to default to a 1 lot. Let me jump in and throw a, put in a quantity that's normal for our clients, and I'm going to change this from 1 to 10. Oops. And you'll note that it recalculates right away. Now my cash required is here, $9,410. My potential profit's $590. So that's net of everything. My return on cash is a little over 6%, 6.27%. And the target annualized return is 52%. And then you can see that the put strike is 27.20. That's what's recommended. That's the model. The 30.65 is the call that I'm selling. I will buy the 2700 put and buy the 30.85 call. Now, if I don't like these strikes, or maybe I'm a little bit bearish or bullish, I can adjust the strikes to fit what my criteria would be or what I'd prefer. So let's say I want to bring the puts up a little bit, even though, you know, market's down. I'm not really, probably wouldn't do that today, but let's just do it 27.40. 27.20, and I might say, you know, I still think the market's gonna be a little bit more bullish. I'd rather take in more premium and leave it alone, or maybe I'll drag the calls down just a little bit, 30.55 and 30.75. You'll note that every time I make these changes, it recalculates my numbers. So let's take that. You can see deltas if you're into following deltas. They're listed here. I can hit place, and that will place a trade for me. Now, one thing I skipped over real quick, if I want to analyze my trade, and most of us do, right? We want to look and see what's happening with our trade. You can see that there's a setup right there. You can see the chart. I don't have to open up another website and chart to see what this iron condor looks like against the S&P. This is the last 60 days of the S&P and how it's traded. So you can see my put, my sold call, my sold put in relation to where the market's been. Real quick, easy way for you guys to see it and make decisions on whether you like that or not. So we come back here. If I like the trade, I just hit place. Because this is demonstration mode, it's going to fill the trade immediately. When this is your live account, it will place the trade immediately, right? Looking for a fill. As soon as it fills, it will report it as filled, and then it goes right back to your dashboard. In the dashboard, once that's there, right, it's going to have that RTI built in, and now we can see it here. 44 days left, 27.40, 30.55, and done. Now I'm tracking. It has no information until tonight, but once it updates, it'll have the information, and I can track it on a daily basis, looking for cues or signals that I need to make a change to the trade. It's really that simple. If I want to drill down on any of this information and analyze how my trades have gone, I can click in the open and sold positions, choose the trade maybe I'm looking for by highlighting it, and I can scroll down below and see the chart, and I can see the performance. How has it gone since day one, right? I can track all the way through that, see if there's something I should have paid attention to that I didn't. And you can see this is just charting right through with 17 days remaining. So all of the information is there, but again, back to the dashboard, the pertinent information, the information I need right away is right in front of me. That's simple. One thing I need to note here, when it comes to the RTI, and I'll go through this right now in the simulator, you can have it automated to follow the RTI. So if it's blue, you can queue it up to automatically exit your trade. If it's red, you can queue it up to automatically exit your trade, so that you don't have to necessarily worry about jumping in here and pushing the button yourself. You can automate this as much as you like here. So let's walk in and let me walk you through how this RTI really works in your trading. I'm going to pull the simulator. You'll all have access to this. Really cool, where you can go back and test any period of time to see how the trades, the theta trades that were built on those days would have performed. Let's just take the first one listed here. Let's choose this as this is an S&P week 2 for September. I'll come down below and hit place. It won't let you alter trades from the past, but you can put in the quantity to make it realistic to your trading account. Hit next, pulls up the information. So my cash required 9,485. My potential profits 515. That's return on cash of almost 4.5%, and a targeted annualized return of 53.5%. So I hit place, and now it's going to pull up this graph. right? So the iron condor, my sold call is this red line here. My sold put is here. So that's the 2,700, 2,970. I'm buying it put at 2,680 and buying a call at 2,990. So now I can push this. I have this cool little tool here where I can push play and watch this trade play out. What I want you to watch for are these two columns. The RTI is really what I want you to follow. But note, most of you are used to trading off of this number, that profit loss on a daily basis. That's making you make decisions. How emotional is it? Ask yourself, how emotional is it to trade off the profit loss number? It's really hard, isn't it? So, especially if you're doing it on Condor or something like that, it becomes very, very hard. So, if you'll watch for me the RTI and look for decision making here. That's what I want you to focus on. So we'll come in here, hit the play button, and watch it trade out for a second. I'm going to pause it here. You've seen about a week or so go through. I've been negative on this trade for most of the time. Now I'm finally positive. My RTI hasn't changed. It's been green, saying let it go, let us do it, let the trade do its job. We'll go a little further. Now I'm getting more profitable. I've had some up and down, but I'm getting more profitable on the trade. Got 10 days remaining. Let's back it up here. So with 5 days remaining, it's now blue. It's telling me, hey, you're 95% profitable on the trade. Bank this profit, move on. $490, you're leaving $25 on the table here. Bank it, move on. Don't need to watch this trade turn into a loser, even though you have very good odds, right? So that's what that blue is telling you. Bank it, move on. It's that simple. Now, we would love nothing more than to see green and blue all the time. That's not realistic. It's not always going to be the case. So let me show you a trade where you get some more color here. So it can show you what it's designed to do. Let me go back to beginning of July, where I know we got some volatility. And let's choose, I don't know, let's go a little longer term, end of month of August. Keep it in the S&P, keep everything the same for you. I'll put in 10, so we keep our numbers the same. So cash required 9,210, potential profit 790 on this, return on cash about 8.5% or 51% annualized. So I'll hit place and let's follow the same procedure here, right? Watch the two columns, see if we should be making decisions here. Okay, yellow, first yellow, straight into the trade. Tell me, hey, warning, don't need to take any action here, but start to anticipate. If it goes orange, then maybe we'll be ready to execute, right? Or if it's red, same thing. But no need to do anything here, but you're preparing yourself. Back to green, back to yellow. Yellow for a few days, just hug in there, and there's my first orange. 38 days left on this trade. Now it's saying, hey, things have fallen out of favor on this trade. Look to take action. Too much time, too much going on here, not going in your favor. Look to adjust it. If you keep going, more orange, and there's your red saying, hey, no more. Too much risk now. Let's take it off and move on. It's really that simple, you guys. It's designed to keep the emotions in check. Can you see how effective this would be for your trading? It's an awesome tool. It's just like the quote I read you from our client. It's the best tool he's had for tracking his trades. I think you're going to see that. Really, really cool feature here that our clients love. Let me jump back to the dashboard, make sure I'm not forgetting anything. Hopefully, I think I'm giving you a good flow for how this will work and what it's designed to do. But everything's there. Again, the bells and whistles are gone so they don't clutter your focus here. It's awesome stuff, you guys. Let me jump back to our presentation here, if I can get it to pull up. And now let me change your view because I've got it going now. Okay, so here we go. We're back up. Now, I've walked you through all of this. Do you feel like this kid here? I bring this up so that you cannot worry about this. If you're feeling like this, don't worry about it. I will make you, any of our staff will make you very, very comfortable with what we're doing in a hurry. It does not take much time. Don't feel like this. And good question, Pete. Pete's jumping in here with a question as I'm just getting out here saying, is performance net of net of fees? Yes, everything that I showed you was net of any cost, any transaction or exchange fees that are built in. All of it was net. So those dollar figures we talked about were all net. Good question. So don't feel like this kid, right? Now I promised you that our time would be well spent. I know I don't have as much time as I possibly want to walk you through all this. I know it's limited. I want to cover a really special offer for you guys. I also know what you might be thinking. Okay, I want to get started. How do I do this? And why didn't I know about this before? It doesn't matter now. You're at the right spot. You're going to be like our traders, saying the same thing. It's a superb trading platform, and I applaud the attempt to make it even better. It allows a person with minimal trading experience to enjoy the benefits of sophisticated trading, including the use of options with futures. For the first time ever, we're offering to the public in a webinar like this. And that's correct. We've never done Theta Trader memberships via public webinars until now. And the reason capacity is limited, right? And I'll walk through that capacity problem here in a minute. So let's take a look at everything you're going to get with your Theta Trader membership. You get the market bias indicator. You've got the Theta Trader platform, right? That has that market bias indicator. It has the Theta trades, the pre-built option spreads, the trade simulator, the trade builder, which I didn't even get to. If you have your own trade and you want to build it and do your own trade, it's in there. Just choose the market, choose the strategy, and place it, okay? That's simple. With all of this, all of those features, total yearly value of $3,588. Now I told you before, when trades come under pressure and they're looking at orange and you're looking or red and you're trying to say, I got to adjust this, what do I do? What do I do? And one of the biggest problems with trading options is not knowing really what to do or how to adjust that. We thought, well, Theta Trader is awesome, but how can we enhance it even more? We are going to provide you, and the best analogy I can give you is a golfing caddy, right? A trading caddy. Think about the professional golfers. They all carry caddies, and those caddies have a real job of knowing the course, knowing their golfer, building their confidence, helping them when they're in trouble, know if they should be going for the green or laying up. They have a big job, and they're relied on quite a bit. How effective or how much would you enjoy having a trading caddy, somebody who knows the land, you can talk about adjustments, bat some ideas back and forth, and make decisions? You guys will love this. Most of you are used to just logging in to a platform and going, oh boy, doesn't look good, I got to do something, right? You guys will love the ability to trade with somebody who knows what you're doing. Of course you would be, right? So you have now unlimited coaching with a Series 3 licensed professional trading advisor. You can develop a relationship with this person. You can discuss trading strategy, review trade history, have someone monitor your account. And one of the best features, one of the features our clients seem to like the most is you can set it up to receive trade alerts that are customized to your style of trading. This is how it would work. You can say, hey, you set it up, you set your account and say, hey, listen, anytime you're placing a trade or you see a trade that's a good fit for me, I'm busy, I don't want to be watching this all the time, or I just have other stuff going on, let me know. You can get set up on trade alerts where you'll receive a text message or a phone call or an email, whatever your preference is, or you have it posted to your dashboard. And it's as simple as the visual on the right hand side there. You get a text, it shows you what the trade looks like, the net effect of the trade, what the risk is, and you can accept or reject it with the click of a button. Choose the green button, done, you've placed your trade automatically. Choose the red button, you reject it, it communicates back to your trading advisor that's not a good fit, and you move on. It's that simple. Look what our clients say. For someone with a busy life who doesn't have time to sit in front of a computer, AltaVest is perfect. The best thing about AltaVest are the trade alerts you get when the market's trending in a favorable position. You get an email alert asking if you would like to participate. It's that simple. So what's the value on that? How much have you all paid for your personal coaching over the years? We put a total value of $11,964. Okay, $11,964. On top of that, you get the Trade Scope, which is a daily newsletter that offers perspective and specific trading guidance on the days ahead, charts to pay attention to, things you need to know as you're handling your trade. Total value of $2,364. How much do you pay for your news feeds? What are you paying for now? On top of this, you get the daily commentary that comes from AltaVest that reviews the trading day, talks about what trades were placed, what people are doing, keeps you kind of in the know of what's going on and what to pay attention to in the very close future, okay? A value of $588. So let's combine all of these. $3,588, $11,964 for the personal coaching, TradeScope $2,364, and daily market commentary $588. That's a total value of $18,504. Now, would that value be worth it if it saved you money by helping you get rid of the advisory fees, the newsletter subscriptions, the data fees that you're paying for, your option trading platforms, the educational expenses, and the grief and aggravation that really don't have a price? Well, we had two ways we could offer this. We could offer it for nothing and try to maximize capacity as soon as possible. Or we could offer a great value and appeal to the elite traders, not just those looking to swing for the fences. We like our clients to be what we call sticky clients. Be with us for decades. Here's what we mean by sticky. I've had an AltaVest account for about 10 years. I've been a satisfied client of you and AltaVest since 2001. I started with AltaVest back in 2012. I've been with AltaVest for 13 years. I'm a customer of AltaVest since the beginning, 1999. I've been an AltaVest client for over 15 years. We want you to be sticky clients. We aim to prove that to you. Still want more? We offer more bonuses. Let's go through them. You have access now to our social media community, Twitter, Facebook, YouTube, LinkedIn. You also will be invited to join us at our insider trading seminars, where you can meet our team. You can meet people like Steve, key guys from the CME group. We'll have them come in as guest speakers. You will love this opportunity. You'll also get to know other theta traders and get to share strategy and make relationships there, which people really, really like. And you can join us for special events. Usually when we're in your area, we'll reach out, let you know we're going to be there, maybe catch a game, maybe catch a ball with me at the Minnesota game like I did there. You can see I didn't really have a lot of competition in the area, but would have been nice to have somebody sit next to me catching the ball for me, right? Because it kind of hurt. And the last thing, online trading strategy tutorials. Some of you like to be very active in talking with people. Some people just prefer, I want to review this stuff on my own. Everything's on demand. All the education material you'll need is on demand and ready for you. So you can watch it at your time frame and review with your trading advisor anytime. So look, let's review the membership. Let's review everything that you're getting. The platform, the personal trading coach, the trade scope, the daily market commentary, the social media community, live seminars and workshops, options, trade strategy, online help, all of that. I told you it was a value of $18,504. Would you agree that would be a great value at $9,252 if I cut that in half? Of course you would. And I think you would even like it even more if I offered you an even better deal, which I'm going to do. Outside of this webinar, others have paid tens of thousands to get involved with Theta Trader. Now, I'm going to offer you something very unique and offer it one time. Okay, is it okay if I over deliver on the value now? I think everybody would raise their hand if I asked you waited for that, but here's what you get. Here's how much it costs. I've reviewed everything with you. There's your fee. There's your one-time cost. Lifetime membership, lifetime, not monthly, not yearly, lifetime, $1,997. And for joining me today, joining Steve and I, if you sign up today, not $1,997, but $1,597. But you have to do it today. You can see the clock ticking right there. It will end at midnight Pacific time. $1,597, and you have a 30-day guarantee. Okay? I want to make sure you're comfortable. I don't want to rush you into trying to get involved so you worry about putting up $1,597. You have a 30-day guarantee. This will give you ample time to get to know who your trading advisor is, how he or she functions, and how this works so that you can make sure it's a good fit for your trading style. Now, if you're done listening to me and want to get started right away, go ahead, cf.altivest.com/TT orders, and you need to put the number 1 in if you want the discount. Okay, if you leave the number 1 out, that 20% discount is not there. So cf.altivest.com/TT orders 1, or you can call right away. Somebody can help you, 949-220-2720. But there is more information to go through, so stay with me. You have 2 options. You can pay up front and take advantage of the $1,597 and save $767, or you can do a monthly plan, and that's $197 a month for 12 months. Your choice. Bonuses to this. There are special tax advantages when it comes to trading options on futures and commodities. You get to apply what they call the 60/40 rule, and you get a simple 1099 at the end of each year, rather than having to track all your statements. Let me show you how that 60/40 works. If you take a $100,000 account and you trade it on just equity options and you generate a 20% return, that would be $20,000, right? That has to be taxed. To compare apples to apples, let's throw ourselves all into the highest tax bracket at 37%. That's a tax of $7,400. So my 20% return after taxes is now a 12.6% return. If I do the same thing, I make the same $20,000 off of 100 trading on options on futures and commodities. Now I get to apply the 60/40 rule. That says the first 60% of my return, so the first 12,000 of that 20,000, is taxed at long-term capital gains, and the remaining 40%, or the $8,000, is taxed at your typical short-term capital gains. That's a tax of $5,360, or a savings of over $2,000. Now my rate of return after taxes jumps from 12.6 to 14.6%. A big advantage when it comes to doing the same thing in a short-term fashion, right? I mentioned the 1099. You don't have to itemize these. You get a simple 1099 at the end of each year with a profit loss statement that says you made money, you lost money, whatever it is, and then it applies the 60/40 rule on your taxes, and you're done. Again, we had 2 choices how to offer this. You now have 2 choices, right? You could first do nothing, take no action. That's 100% risk-free and reward-free. And second, you could make the small investment now in return for a tremendous value. You have no excuses either, because there's a money-back guarantee. And I really don't care if it's the last hour, last minute, last day, doesn't matter. We will refund you your money, $1,597 there, right? We want sticky clients. We want clients to be around forever. I'm not going to hold your money hostage if it's not a good fit for you. You'll have 30 days to fill that out, and you'll love it. So I mentioned quantities are limited. Let me explain this. We intend to hold ourselves to the highest degree of personal service. Our membership capacity has to be limited for that purpose, to ensure that all of the clients have that unique one-on-one boutique style service with their trading advisor. We don't know how much longer we can offer this to the general public. So take advantage of it now. $1,597 today, $1,997 thereafter. More from our clients. Their brilliant algo trading system never failed me, and neither did my helpful AltaVest advisor. Common question that I get, and I'll just cut you off before I open it up to any questions. Yes, you can trade your IRA. 100% can trade your IRA, other types of accounts, individual, joint, corporate, LLC, or trust, typical. And when you set up your account, you're going to have access to Courtney, who has been here longer than I have actually. She knows the paperwork inside and out. She can help you here. So take advantage of that. Let her help you with paperwork as much as she can. I know that paperwork sometimes is a little bit of a roadblock for some of you and not wanting to open a new account, but don't let it be. She knows how to help you get it done quickly. Now, you still want more? You want this for free? Don't even want the 20% discount. You want it for free? Okay, you can fund, if you fund your account with 100,000 or more, we will rebate you the 1997, or if you do it today, the 1597. Okay, just get started. cf.altivest.com/TT orders, and the number one for the 20% discount, or call us 949-220-2720. Fund that account with 100,000. We'll rebate you that upfront fee. Now, we've walked through all sorts of experience, 40 years of experience. We've talked about secrets of trading. You can see how Theta Trader is designed to help you avoid those mistakes and take advantage of the secrets, right? Experience does matter. Full-time trading isn't glamorous, and less really is more. You now have solution to common problems of market direction. You have market bias indicator. You have strategy and market selection. It's all generated for you. Market timing. Consistently execute your trading plan. You have an RTI that helps you focus on that, and the time is no longer an issue. We offer all of this under one umbrella: the sophisticated algo-driven options advisory, the automated risk profit management licensed trading advisory community of like-minded traders, right? That's your Theta Trader membership. Altivest has exceeded my expectation with their pre-selected Theta trades. I receive trade recommendations via text, and I can accept, pass, or give a call to my broker for more information. Responding to a trade alert takes but a minute or two. A chart and the parameters are provided, and I do not need to spend time at my computer trying to find my next trade. Remember, I asked you to take action, right? Challenge you to take action. I know you've liked what you've seen. You've got a 30-day guarantee. Jump in, get started with us. You will love this. There's our information. There's your review of your Theta Trader membership. Give us a call if you got further questions. 30-day money-back guarantee. We look forward to working with each and every one of you and really appreciate your time today. I'll stay on for another minute or two. If you've got questions, throw them out there, or just give us a call and we can talk it through. Best luck, everybody. Hop online, get started, and we look forward to working with all of you.